Hello and welcome to Business Today Television. I am Siddharth Zarabi, and with me, a power-packed panel at the India perspective with PwC from Davos. Great pleasure to introduce Sanjiv Krishan, the chairperson of PwC in India, to my left. Nivruti Rai, the managing director and chief executive officer of Invest India, and they're doing a lot of work here at the World Economic Forum. To my right, a familiar face, not just in India, but all over the world in the banking world, Mr. Dinesh Kumar Khara, the chairman of the State Bank of India. To the extreme left, Bharat Kaushal, the managing director of Hitachi India. And to my extreme right, Ishpreet Singh Gandhi, founder and managing partner of Stride Ventures. Now, if you're wondering what we are doing here, I have to tell you that PwC does an annual survey. And this questions a lot of chief executive officers about multiple aspects, including how they see business going forward. And since we are right now at the top of 2024, I'm going to request Sanjiv to start with and give us the key findings of the latest survey. And then we're going to open up to the entire panel for their views on the topics that Sanjiv mentioned. Sanjiv, over to you.
Thank you, Siddharth, and a very warm welcome from a very cold Davos to all of you. As Siddharth mentioned, we actually host an annual CEO survey. This is our 27th year that we've been doing it. And what I'm going to speak to you now is really what are the findings that have come from it. We interviewed 4,500 CEOs. So this survey actually is the sense and summary that they gave us. Now, what are they telling us? I think the headline news. First of all, there is more optimism this year than there was last year. Most CEOs believe that global growth would be better this year. In fact, the numbers are going up from 18% to 36% this year, which means CEOs are more optimistic about global growth this year. However, there is a challenge. 45% of them believe that if they continue to do the business in the way they are doing it, in 10 years' time, they will cease to exist. Now, these are two key data points that have come out of the CEO survey, which particularly the second one means that there is a need for business model reinvention. And I think that could be a good topic for our discussion as we move forward. There are a few other aspects which I would like to actually highlight. From an India perspective, India's ranking as a desirable investment destination continues to go up. And we are now number 5 in that pedigree. In fact, if I were to talk about some of the key clients that we have globally for the firm, from a PwC standpoint, India actually ranks number 3. So India's stock is continuing to grow, and I'm sure that we will see more of that manifesting in years to come. Now, a few other topics, as I mentioned. First and foremost, we all talk about sustainability, we all talk about technology, etc. Where India is actually standing out is the fact that India seems to be doing everything across all the 4 transitions that the world is seeing, whether it's a supply chain transition, energy transition, technology transition, and of course the demographic transition that the world is experiencing. The reason that India is much wanted is because India is central to each one of them. Indian CEOs, as a result, are far more sanguine. And, almost 86% believe that they will turn over better next year than they did in the previous years. In fact, if you were to look at a 3-year journey, 94% of them believe that they will do better over a 3-year period than they have done in previous periods. So obviously the Indian CEOs much more optimistic than the global CEOs about their ability to do more in years to come. And the good news is that in spite of everything, including technology and so on and so forth, there is going to be significantly additional employment generation that's going to happen in India. We keep talking about, is Gen AI going to disrupt the workforce, and there will be less employment. The statistics coming out of the CEO survey is that there will be greater employment in India, which is important because it means that growth in India will be inclusive. The other finding is that the focus is not just on services in India. Largely, one would say that India is services driven. We know the growth of GCCs in India, but I think the growth is getting a little bit more balanced. We have seen some relative success of the PLI schemes already, and with the uptake on that has been good. I think the focus on the manufacturing side is also now manifesting, which means at some level, the supply chain shifts that we spoke about are now starting to bear fruit. And I think as India plays a bigger role in both the energy transition and the supply chain transition, there will be more for us to do. I will just hit 3 more points, and then I'll hand it back to Siddharth. The first point. On technology, particularly when it comes to Gen AI, the survey actually shows that the CEO is possibly a little bit more optimistic as to what Gen AI might do. Interestingly, 32% believe that they have already adopted Gen AI, which seems a bit optimistic at this point in time. Many of them say that, almost 58% of them say that this is going to cause them to create efficiencies in their business. And almost equal number are saying that this will help create greater trust in their business. Now, considering that we keep talking about risks like cybersecurity, you read the word Gen AI and you see hallucinations coming in the same paragraph. So this is something which I'm sure we'll get the panel's views. But clearly, I think a little bit of over-optimism about Gen AI. The second one. Sustainability. I think clearly the focus on sustainability is evident, particularly on energy efficiency. I think decarbonization is something on which a lot of CEOs are focused on. But they seem to always think about, is there enough demand? Point number one. And point number two, what are the kind of returns that I'll have if I focus too much on decarbonization? The last point that I will say, and CEOs in 2024 seemingly will be kept more busy. Because as they look at reinventing their businesses, except regulation, everything is really in their control. Whether it is financial resources, whether it is adoption of technology, whether it is of cutting the administrative burden that their employees and they themselves face, a lot of what CEOs could do to reinvent their business is in their control, and we will have to dig deep to figure out how we will create those efficiencies and productivity gains. And I think that's something which means that all of us will have more to do in 2024.
And that's an important point, Sanjeev, that you ended. We all will have lots to do, and that's one of the most important points across globe. Mr. Khara, I'll begin with you before going to Nivruti for the Invest India perspective. And just to re-emphasize what Sanjeev just said, 86% of Indian CEOs who were part of the survey are extremely confident in India and growth in the next 12 months, while as only 44% of global CEOs are confident of growth in their respective territories. A similar finding last year as well. But what does this tell you?
I think when we look at India, I would say that it stands out as compared to the rest of the globe. That is one of the reasons why perhaps when it comes to the Indian CEOs, they are having a very high probability they are assigning to the growth which will be seen in this economy. And we have seen actually that post-COVID, the way the economy has shown the resilience, that has actually enhanced the confidence level of the Indian CEOs. And also we have seen that how the rest of the globe has reacted to the post-COVID situations. So I would say that it's attributed to the kind of policies which have been adopted in the economy at a very crucial stage. And the kind of handholding which has been offered, I think that has gone a long way in terms of showing this kind of a confidence. And also I would also like to mention that it is also attributed to the kind of situations which are prevailing across the globe, and there is a huge opportunity for us to really ramp up our manufacturing. We have been majorly a service-led economy, but now the kind of focus which has come in with the help of PLI, etc., and also because of the China factor, now there is a huge opportunity when it comes to the supply chain rebalancing, and we have the skills, we have got the entrepreneurship also. So actually speaking, we have it's an opportunity for us to get integrated into the global supply chain. We have seen that when it comes to the auto ancillary manufacturing,
right,
very much part of the global supply chain. But when it comes to engineering, when it comes to white goods, we somehow missed out there.
Absolutely.
So now I think it's a time when we are already seeing the investment flowing in for the global supply chain in terms of engineering, in terms of telecom equipment, etc. And also the new lever of growth, which is actually the green.
the EVs, the battery storage, the solar cell manufacturing. So I think these are the new levers of growth, which actually will be consumed by the rest of the globe also, and also as much by India.
Absolutely.
So these are the reasons why perhaps the kind of the
Optimism
reaction which we have
that
seen from the Indian CEOs. These are the contributing reasons, as I understand.
Nivruti, the theme really can be summarized in two words: resilient growth. And that's what India is demonstrating. Does this kind of optimism within India also mean, and this would be logical, that for global CEOs who do not expect that kind of growth in their home countries, that they are looking with a renewed sense of mission for investing in India? Does that translate on the ground? Is that what foreign CEOs who you may be meeting are telling you?
So firstly, very interesting question. And let me just answer one thing more that, you mentioned. You said 86% of Indian CEOs are very bullish on, India growth, and less than half of them, half of the number is global CEOs. And to me, I was thinking, why is this happening? It's happening because the Indian CEOs are seeing the change that's happening every moment. I'll give you one example, and now I come to answering your question. Last year, I was traveling to US, and in 2 weeks, I met 40 CEOs with my team. And firstly, they were very, open to having a discussion with me, and these are all CXOs. They are completely sold on the India story. What they now worry is, how do we execute to it? That's their worry. And their worry translates into, are you going to have stable, consistent policies? Is there going to be transparency in those policies? If the government changes, how will we know what's the impact going to be on the policy? They do believe in the strength, the ability of, R&D is proven. They also believe in the middle class growing. And, every time I met a CEO, I said, do you know that every year India is adding in New Zealand and Australia to its middle class, 30 million people. And in the last 10 years, the middle class buying capacity is doubled. So not only do we have a market that's looking very attractive, we are a consumer-driven economy. So yes, consumerism is very important for us, but we are also showcasing technology. So whether it is, the moon mission or even the solar Lagrangian and, so many other researchers that we are trying to drive focus on renewable energy. I know 500 gigawatt in the next few years with 350 solar is going to be a challenge. But the best part is, Indian government is listening. So just to finish my story on the US CEOs, one of the CEO, and again, very much like you mentioned, we were trying to say, can we look at your suppliers moving to India versus a Vietnam versus a Thailand? And by the way, my team has done an analysis which compares policies, regulations, not just within the states, but cross-country. And the sectors which are very important for us, renewable is one of them, clearly food processing is the other one. We have looked at which are the countries which are doing really well and what are we doing as India. And our goal is, if this is an important sector for us, we better have no reds when we do the policy comparisons. So in one of the meetings, I was trying to draw the suppliers to move to India, and the CEO says, actually it was Chief Supply Chain Officer, he says, hey, but I have this one problem that, my issue with customs, my issue with some duty, can you help me with that? I made a call, because this customer is really, really important for us. I made a call to my Minister of Commerce, Shri Piyush Goyalji, in 36 hours. And I told him, if we don't do this, this is what we're going to lose. My learning in the last 4.5 months that I've been in Invest India is, if we translate our ask very crisp to the government, if you don't do this, then India stands to lose this. In 36 hours, we got the case resolved and made the Chief Supply Chain Officer happy. And I'm working on drawing their suppliers. So I'm very bullish. My team is bullish. And I believe that, we will be able to accomplish 3x GDP by 2030.
That's a wonderful point. Bharat, I'm coming to you. You represent one of the largest companies in the world, and you have very deep footprints all across India. We spoke about that earlier. But on the subject, as the representative of a very large global multinational, what is your growth ambition for India, given the context that has been set in this conversation?
Thank you, Siddharth. I think, Japanese companies have historically been low-risk takers. And they were maybe towards the end buying into a big India story. But now the whole of Japan Inc. looks at India, not just from a geopolitical change perspective, but also from an economic prosperity perspective. They look at India as India for India and India for the world. So that's the distinction they've drawn between Southeast Asian markets, where they've been historically present, and India was always known for middle class and talent availability. What has changed in India is implementation, first of all, especially with public finance and public infrastructure. Both infrastructure, the big success of Digital India in the last 5-7 years, is a moment of truth for the Indian economy, where for the first time from a follower country, you became a leader country in every aspect of how digital explosion took place. And also in infrastructure, the delivery, whether it's rail or roads or power, everything has seen such a big movement and the second aspect, which links to implementation, is quality. I mean, we all know now that the Tesla car or the other icon of the Western big developed world, Apple iPhone 15, everything is made in India. But what you're trying to do with green, redefining the capacity, India is the place talking about new capacity building. I mean, we are doing North American railroads out of India now, besides bringing a bullet train into India. So that's how India is positioned from a Make in India perspective. And also on things like magnets, which are converting all electrical energy to mechanical energy. With low use of rare earth, we are being able to use quantum computing and bring more optimality. And another good example in this is Gen AI. Historically, all of that developed transition challenge, cost-to-income ratios in Europe, America, and in India in infrastructure were always very high, in 90%. And therefore, the margins were in single digit. So as the line of B2B versus B2C gets blurred and B2B2C, a CapEx plus an OpEx model is emerging, when you use Gen AI on top of mathematical library-based algorithms that were already using digital technology over operating technologies, you are able to provide so much of higher benchmark of cognitive intelligence threshold that you're seeing the difference come in Europe and in America, and which is why we've succeeded in building that business.
I wanted to ask you whether those railroads will have Made in India written on them, but I'm sure you'll tell us that. Ishpreet, I want to come quickly on this and move to the subject of reinvention. One of the other findings is 38% of Indian CEOs think their business models will need to undergo change in less than 10 years to survive. This is compared to 45% globally. Now, this is one of the findings, but taking off from there, the companies that you work with, your own personal experience, what does it tell you about the ability of Indian companies across the board, whether the largest or the smallest, new startups, to survive in a rapidly changing climate, business climate, with technology forcing change, Ishpreet?
First of all, thank you for having me on this panel. I was about to actually pick the statistics of Sanjiv, which you just picked, in terms of stating that the most important element of all of the businesses who are thriving is to make sure that they're relevant. That's happened globally. Fortune 500 companies keeps on changing hands. And Nirvuti's point of stating that the biggest worry is how to execute the Indian CEOs. So I think I'll just take a step back. Look, I come from a banking background. We funded large corporates, mid corporates before I started Stride, and now we've funded almost 10,000 crores in startup ecosystem. The whole point which we have analyzed is there are two spectrums of people. One are the new age companies. Traditionally, we look at them as more of startups in terms of early stage companies. We fund more of mid to late stage startups who've done the product market fit, upwards of 100 crore revenue. And what we realize is we have investors who are largest families in the country who are running traditional businesses. The marriage of both of them is very interesting. Right? Because of the fact now, for example, we have a company into EV recycling battery who've transformed into a specialty chemical company. Now they've opened 7 plants in India, and they've been invested by global investors of all repute, sovereign funds, and some of the largest Indian families in auto have invested in them, understanding what they're going through in terms of their processes, technology. These are Harvard guys, 20 plus years experience. I think that's where the intersection is very interesting. We spoke about AI, we spoke about manufacturing, we spoke about global supply chain. I think the sanguinity is right there. We see it in the reflection of the public markets. We're all positive. Davos is all positive. The point is that I think the execution will boil down to marriage between the new age companies and the traditional companies. I think that's where at least we think we can play a pivotal role, because we see large corporates, mid corporates, new generation coming in, trying to reinvent the business. And these companies are trying to disrupt. But they don't have maybe the bandwidth to take it.
So do you lay bigger bets on the disruptors or those who have already profitable businesses?
That's our bread and butter, so we only go that way. The point is that they know 1 to 10 journey. The 10 to 100 journey is with the marriage of people who've been there, done that.
Yeah.
I think that intersection is very unique and very positive. And for example, AI, generation AI, now this is very wide term, right? We can have a separate discussion on that. But the execution of generation AI in terms of supply chain finance, in terms of banking, in terms of everything. Now we also run operating NBFC, in which we have processed 10,000 invoices last month. And we've not actually added a single operational person. It's done through the marriage of AI to make sure that you execute all the invoices within seconds, not even minutes. I think that's where the businesses will get married. And the intersection is what excites us. And we've seen multiple business, EV also, we've been across the ecosystem. We see a lot of transformation now to companies trying to work alongside a lot of EV companies, whether it's battery swapping, infrastructure, mobility. I think that's where the
I think
theme
just
is.
to briefly add, on Gen AI is not just about the transition from predictive to corrective, but what it does is that it recalibrates the balance between privacy and empowerment, because it is sort of hidden somewhere. It is your tool, your mentor. And that's what it's doing to operating technologies. That's what it's doing in education, health, payments, and all of these things which have actually shot up first. So,
may I give an example on
Yeah, go ahead, please.
I love the fact that you said, you feel that empowerment with Gen AI. I want to give you one example of what my team has done. So you have not probably heard generative AI being used for policies. What we've done is we've built a large language model, and right now it's English, but our goal is all Indian languages and even foreign languages. But what we did is all policy documentation, which were, federal or central, and all state policy documents we fed in. And the benefit is, when we, give this access to a foreign investor, he types in a question and the answer comes back in the language he understands. I mean, simple English, non-legal, not, whereupon, thereto, hitherto, those kind of, very complicated English. It translates into very simple policy statements. And our goal is to leverage all of the G20 nations, and we have actually made a commitment to use this tool and have all G20 nations policies fed in there. So anybody can look at policy comparisons, and that leads to, somewhat of an ownership and also transparency.
Okay. Sanjeev, I want to come to you to sort of summarize the key challenges, the top 2 maybe, that Indian CEOs face, and your own sense of how they are trying to mitigate the risk that arises out of them.
So I think the first thing first, I think if you look at the last 15 years, maybe almost 2 decades, global CEOs and Indian CEOs as well have been used to very low interest rates, right? I mean, that's been a huge thing. It's benefited many of them, right?
I was directing that question at you in some way. Please
leverage has been key, right? Now we are all of a sudden, not all of a sudden, now I think the interest rate regimes have changed, right? And I think this is something the new age CEO needs to deal with it. I think the second one is really the disruptions are coming to them fast and thick, and they're coming to them together. Now, how can you deal with all of them together is also something which is very, very critical. And on top of it, I think one of the defining things is, we've been talking about Gen AI and we've been talking about sustainability, two big themes. At the end of the day, who's to deliver it? And Nivruti just said, it is about execution. Who's to execute? We have to execute. So the upskilling of your people and yourselves to be able to deal with this world which is so dynamic and which has changed so drastically over the last 2 decades is something. So the quality of talent, the quality of upskilling and your temperament to be able to deal with those disruptions, I think is going to be key to a successful CEO. And let me also say at this forum, I won't be surprised if there is a significant CEO churn because many of them are not able to deal with this.
Okay. Lots of points there. Finance, disruption, the challenge of talent, and the final point Sanjiv said that how many CEOs, and this is a question if you're watching and you're a CEO or aspire to be one, how will you be able to deal with this? Mr. Khara, on the first point, the interest rate environment, a question that I have also asked you so many times, what will happen now?
Well, I think as far as the interest rate trajectory is concerned, you would have observed from whatever has happened in the past about a year or so. I think as far as the RBI is concerned, it has decoupled itself from the global central banks. While the global central banks were increasing their policy rates, RBI stayed on, but at the same time they had a very clear focus in terms of inflation. Inflation in a country like India is essentially a supply side issue, and I think supply side issues are addressed to a greater extent, and that is one of the reasons while we were seeing the challenges in the whole of the developed West in terms of inflation going up, we are having almost a steady trajectory. Having said that, we are very clearly focused in India in terms of bringing the inflation to 4% range, and we are somewhere around 5.5 kind of a number as of now. I think supply side there is not much of an issue, but yes, of course, as far as the demand is concerned, Reserve Bank of India is ensuring that the liquidity in the system should be just adequate. It should not be excess, it should not be low, it should be just adequate. So that is one of the very important and pragmatic step which is being taken by Reserve Bank of India to ensure that there should not be excess money which should fuel the inflation. So I think these are some of the factors which are the guiding factors for the interest rate. Having said that, I must also mention that globally, I think we are in a much better position as far as interest rates are concerned. If you really look at any of the maybe US or UK, today the mortgages are being done at about 8.5–9%. Whereas in India, in rupee term, you can have mortgage at almost or maybe a 8.15, 8.25, something like that. So that is a very clear reflection that we are actually turning to be a low-cost economy as far as interest rate is concerned, if you compare it with the West. So I think we are in the right direction, and since our policies are very well calibrated, I'm quite hopeful that we should be in a position to handle the menace of inflation and also will bring down the interest rate maybe about 6 to 8 months from now.
Okay, 6 to 8 months from now. Bharat, I want to ask you about, and Nivruti touched upon that, what has happened. 10 years of Modinomics, and this is our term, our programming at Business Today television that we are using. For the next 5 years, what do you think are the reforms or changes that are required to our policies that will help deliver on the promise that this survey shows? So there's a big idea here, but like everyone is saying, on the ground execution, what needs to be done from the policy side?
Yes, and frankly, no company or just a single economy with the speed of change can take care of its the whole thing on its own. We need a full ecosystem of partners to deliver it. I mean, just look at innovation. Has a potential of taking a geometric progression out of a 3 trillion economy becoming 10 trillion. But the first stage of innovation was aggregators, and the asset owners remained untouched. So it's like a very typical Disney versus Netflix debate, the asset owners were still in single digits. The aggregators were at 20-25%. The next generation of innovation to push a new sweet spot of convergence between asset owners and aggregators, offering mobility as a service, energy as a service, infrastructure as a service. That's where the CapEx, OpEx, higher IRR benefits a much larger scale. In no economy, innovation makes a big dent unless asset owners directly get involved.
Okay.
And that's the focus that we should have in our strategy as much as the country's policymakers.
Nivruti, you wanted to come in on the same question. What more perhaps needs to be done? Any changes that people, like the example that you gave us, say that please go ahead and change this and I have money and projects that are waiting to come into India?
So that change has actually already begun. To add to what Bharat said, I completely agree with him. It's about the ecosystem. And the way, Invest India, right now I say it's Invest India is 2.0 because we marketed India in the first phase, Invest India 1, and we marketed India so well. Everybody is saying, okay, yeah, there is a possibility now deliver. To do that, my thought is, and I'll tell you my own company's example, my ex-company was Intel. And India was really trying hard to attract Intel. Now what happens is, Intel, for its leading fab investment, has to put in at least a 20 billion instantly and 100 billion over the next 5 to 10 years. It's a huge capex. Will it risk all of that when there's no other suppliers there? Answer is, I doubt. Second thing is, do we have that kind of demand? So what we are looking at is, rather than saying, okay, Intel, you come, I flip the bill of material and I say, what are the lowest raw materials that I can attract to India?
And quickly do that and
Yes.
start creating.
Yes, not only draw the raw materials, I'm saying, okay, for a fab, I also need, chlorine, for example, as simple as chlorine, or, plastic and forging of steel. Can I draw those companies? They need certain level of quality and create a business for them, not just for fab, but perhaps for others. So I treat each raw material as a business.
As the base of the pyramid
Yes.
and start building
And
from
I'm
there.
trying to draw one lower. And such, I come to a point where a company like Intel will be almost sucked in. Oh, the supplier ecosystem is
So
there.
if we have begun that journey, clearly we
Yes.
have, how many years do you feel will be needed to get us, company like Intel to finally put the sort of cornerstone on the top of the pyramid?
See, I don't want to answer Intel because I no longer am Intel. But I'll tell you what my thought is, because I have 30 years with semiconductor, I better be able to answer some things. So my approach is, I want to attract into India older nodes. If you look at the companies like TSMC, Samsung, Intel, they're all investing in cutting edge leading nodes. When we invest in the leading edge, do you think microcontrollers will not be required? Do you think the older technologies will not be required? So my strategy is crawl, walk,
Dal
run.
chawal of the semiconductor industry.
Yes. So I am focusing on the crawl, walk, run, bring IP designers, bring raw materials, bring older technology nodes, get ready. And my belief is, in 5 years from now, the likes of TSMC and Intel would definitely come. And
That's a very important point, because semiconductor and some large ticket investments there would perhaps be something that we are all looking forward to, because in many other sectors we already have the biggest from the globe. Ishpreet, in the changing scenario, and I'm not trying to get into the fintech versus traditional bank debate, but how do you see the role of financial services companies evolving, given all the challenges and the opportunities that exist? And Mr. Khara, I'll take that point after Ishpreet's comment.
Sure. Just before that, a thought on the economics playing out. So what we like to believe, what we've taken a stance, there are three themes playing out closer to what others have said. One is Indian companies born global. So can we have an innovation to an extent of an Amazon, Tesla kind of innovation happening from India going forward in the next 5-10 years? And there are companies who have capabilities to build. The thought process has started doing. Second is the domestic consumption story, which is playing out overall for ensuring that there is enough and more for us to to capitalize. And then there is a China opportunity. So these are the three themes which we have typically seen on ground from global investor for our domestic investors' perspective, which has been very important. Now, answering your question on fintech versus banks or the implementation, right? The embracing of the ecosystem. Now, we've actually funded 25 odd fintech businesses of various kinds. And what we realize is if it is fintech lending oriented business, they have just been feeder to banks. But there are a lot of new technology like banking as a service and AI in finance, which has now started speaking a lot in terms of execution. So we started funding those companies where banks act as an enablement. It's very difficult to move large banks. MNC banks, large Indian private banks have, well, they have the depth, right? The innovation will take time in the ecosystem to come in. We're just speaking about SBI's startup branch, right? So there have been a lot of thoughts which are going in that direction. But it's important to embrace the technology which can ensure that the effectiveness is there directly into the companies, as well as enabling banks to offer various services. So we have started focusing on those businesses which are not trying to lend only. I think there's been a lot of talk about lending without underwriting or not deep underwriting and who's taking the credit call. And that's where the gap was coming out. And hence you've seen RBI doing a lot of changes over a period of time, whether it's in consumer lending or commerce lending. But enablement to the banking and AI and finance are the themes which is really cross-border payments. We're speaking about enabling international payments. That's something which has really started playing out. We see a lot of action there. These are the 2-3 areas which have really started coming up, and we see amazing amount of startups. In fact, we just invested in one last week, which is also a platform to ensure that consumer can straight away go into the various kind of assets and do either deposits, bonds. So there are a lot of activities happening in terms of working closely with banks.
Mr. Khara, adding to that, if you can just sort of tell our viewers that what is the most interesting new trend that you see in the overall lending space that interests you and you feel, okay, this is something the State Bank of India should be considering because this is going to help us serve our customers better?
Yeah, as far as lending space is concerned, I would say there is a paradigm shift as compared to what we have seen in the past. The corporate lending used to be the mainstay for many of the banks. Of late, because of the consumerism, which has been talked about, we have seen that there is a significant growth in the retail lending. Having seen that, there is a requirement for ensuring that the underwriting should be very tight. There should be all as far as the decision engines are concerned, they should be part of the loan management systems. When it comes to the collection machinery, it should be very effective. So actually there comes the need for adopting the change. And I think we as lenders and also the legacy entities, we have adopted changes in terms of adopting the newer technologies which is being made available by all these fintechs. So actually a collaboration which we get to see is essentially attributed to the ability of a fintech or a startup to offer the solution almost on the go. And we as a leading lenders, we can consume those solutions. So I think there's a whole lot of collaboration which is there. But yes, of course, as far as the lending space is concerned, it is changing. It is no more the corporate lender. It is the corporate banker. So it is actually the bankers are in a position to offer the complete bouquet of services which are consumed by the corporates as compared to in the good olden days when they were only lending to the corporates. So I think banks are actually contributing to the efficiency of the trade commerce industry. When it comes to the payment system, the kind of efficiency which we are seeing on ground, I must give you some data point, particularly when it comes to RTGS, which is 24/7/365. It's a huge convenience to the customer, but for the system, they have to block 50,000 crore rupees every day, because who knows from where the money will come, where the demand will come, and where the settlement will happen. So I think there are no free lunches. And banks in particular have to see that how can they make good the cost of that 50,000 liquidity which is blocked. But yes, of course, we believe that if at all efficiency is created, if at all enterprises are well off, we will have more opportunities to generate income from them.
So this is a very good point, Bharat. Please step in. But I just want to recap it for our viewers. 50,000 crore on account of something that now every user of RTGS considers a birthright. RTGS anytime.
Yes,
But
yes.
look at the consequences of technology.
I mean,
Bharat.
we have Hitachi and State Bank of India have a digital payments, very robust joint venture. And it's unreasonable, given the whole norms and regulations, to expect banks to charter solutions into territories where standards are not defined yet, like green. So there are transition challenges, there are foundational technologies, there are breakthrough technologies. You need to incentivize like a GST. You need to incentivize the design guys as much as the process guys, not just the outcome guys. Where should the money be? And everything is being reinvented, and the shelf life has a redundancy already embedded in it. Something would have improved and changed. So you have to recover that money within that period. So these are things that, yes, government is stepping in, there is policy initiative. Banks are actually, as Mr. Khara said, taking a lot of initiative to reach out. But there are also other norms that we have to wait for as an economy, for the world to recognize that these are the new benchmarks. So today, every document which is inviting other investors is talking about green and efficacy. But look at the difference in the standards across the board, not just in India, but even within Europe. So we are all learning from it. So you have to sort of discount for a little bit of, speed resequencing sometimes between what I say today and what I will say next year or in 3 years from now. But basically, we're looking at India for India and India for the world.
Absolutely. India for the world. Sanjeev, as we wind down this discussion, and there are so many other points, and you can perhaps go online and read through the entire findings and the responses to get a more granular overview. I'm going to request Sanjeev to summarize it for us, because one of the points that I was noticing, and this has been said, last 5 years, the biggest reasons for reinvention have been technology, regulation, and competition. Will that stay for the next 5 years? Closing comments to you on the panel today.
Thanks, Siddharth. I would say yes. And, this adoption has to be inclusive because particularly when technology, and you look at Gen AI, that's a buzzword, but even technology at large, it has to be inclusive. Look at the India Stack, what the India Stack has done. In a way, it has been a public sector initiative, and how many private sector businesses are now using it to create value for themselves. So even in smaller corporations or corporations which are wishing to leverage technology, I think the adoption has to be inclusive. It has to manifest itself down to to every employee in the company. That's when the real benefits and the efficacy gains of technology will come through. We also need to understand the risks. The survey has pointed out certain significant risks that are coming out of new technology adoption. And we have seen some of that in India with fake news and with cyber risks and so on and so forth. And everybody needs to be aware of the risks that come with the adoption of technology and what can go wrong.
Invest far more on tech risk mitigation.
Absolutely, and that's why the survey actually says that a lot of what we ought to do is within our hands. How do we allocate resources to technology adoption? The survey actually says that wherever we have allocated resources to technology, the outcomes over a period of time have been good. We need to stay the course because it is not as if it's not going to be night and day. Likewise, when it comes to sustainability, it's not going to be night and day. We will have to give it some time. Again, good finding coming out of the CEO survey. 4 in 10 CEOs are actually saying that we are willing to take lower returns because we are actually going on the decarbonization journey. So I think nothing will happen overnight. We need to sort of maintain our calm and composure as the disruptions continue to hit us. We are on a good path. India is on a good path. I think we just need to make sure that the next 2-3 years, all of us come together to make it work and shine India even better at Davos and worldwide.
Absolutely, Sanjeev. And 5 years more of policy continuity. That's the message, in fact, that the stock markets in India are already giving to us, but we'll have to wait and watch in terms of how companies seize up and prepare for all the transitions that they face in 2024 and beyond. I'm going to thank my entire panel for their time today with us, and you, the viewer. We'll be back with more. Until then, goodbye.